Let's welcome in Katie Stockton, Chief Technical Strategist at BTIG. She is out with her year-end chart book. It reflects a pretty bullish global outlook. It's a pretty weighty chart book here, Katie, so we don't have a whole lot of time to go into everything, but let's hit the U.S. markets, Japan, and the emerging markets. First off, here's what everybody wants to know. It's been a great couple years. How much more gas is left in the S&P 500 market tank?
Well, it's been all about momentum for the S&P 500, of course. And if you look at the chart here, you can see we're very close to all-time highs, really just digesting the gains in a consolidation phase here near term. The momentum is still very much there on a long-term basis. And I've been likening this market to 2013 in that it had this almost uninterrupted uptrend, barely ever a pullback, and yet still maintain that strength. And I attribute that to the breadth behind the market, or the market participation.
Yeah, let's talk more about that, because I know you want to look at the advanced decline line versus the 200-day moving average. Obviously, it blew through it at the beginning of 2016, hasn't looked back. But why is this an important chart? Why are we looking at the AD line?
This is important because this market has been highly criticized for having narrow leadership. But in actuality, while leadership has indeed been narrow, in fact, when you look at the breadth behind the market, it's been quite strong and expanding really most of the year. So when you look at this trend, you see no signs of exhaustion, no negative divergences, and that would be an issue heading into the new year. But because we've had that broad participation, it is something that can persist and suggest that the uptrend still has legs to it.
So people say it's a narrow market, you say fake news, right? Because you're proving it's a pretty broad-based rally. Fair to say?
If you remove the FANG stocks, we still had an up market. And if you talk to a lot of institutional investors like we do, they've generally had a pretty good year. And that's because there has been that broad participation. So a lot of stocks up on up days.
Okay, let's talk about a market that's been a heartbreaker and a moneymaker alternately, depending on when you bought it. If you own the Japanese Nikkei 225 in the year 2000, you've just broken even now. You've lost money from 96, but it's had a heck of a run from a couple of years ago. Is the Nikkei 225 going to finally break out to the real upside, or just break everybody's heart again?
I think it already has broken out, and this is probably one of the most exciting charts, in my opinion, going into the new year, in that we've seen the Nikkei 225 clear resistance from the year 2000. That's way back here. And this breakout that we've seen does bode well for not only intermediate term upside follow through, but long term upside follow through, in the same way that we saw in the US. The S&P 500, of course, broke out in 2013, and the NASDAQ composite had broken out as well and saw instant follow through on back of those breakouts. So I think this is very exciting. We tend to want to shy away from buying into strong up moves, but in actuality, when you see a breakout, that is a positive technical catalyst. So it does bode well for not only strength from Japanese stocks, but also relative performance from Japan versus the U.S., because we have a fresher breakout in Japan.
Okay, and we'll stretch it out around the globe. The final chart is the EFA index relative to the S&P 500. It looks pretty bad. I mean, does it look like we're going to finally have a meaningful turnaround here?
You know, the long-term downtrend is still very much in place when you look at EFA country, or essentially developed global markets, versus the S&P 500. And yet in 2017, so this year, we have seen a loss of downside momentum. It's somewhat subtle. You can see it a bit more obviously in emerging markets on a relative basis. But I do think that with the breakout that we saw in Japanese stocks, combined with this loss of downside momentum in relative terms for global markets, I think it bodes well for a lasting turnaround where we actually see the U.S. relinquish its leadership stronghold that it's had for several years. You can see that here. And I would even look for Europe's stock 600 to break out in kind with the Japan at the Nikkei 225.
Okay, we're looking at Japan, we're looking at Europe. Katie Stockton, just a couple of different charts from that year-end chart book of BTIG. Katie, it's always a pleasure to have you on Trading Nation. Thank you very much.
Good to be here.
Thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.